Hello everybody, and welcome to another Bitcoin technical analysis video. In this video, I'm going to be going through the exact reason Bitcoin put in its most recent high at around 18K3. I'll be explaining why this area we're at here is a minor level of support, and I'll be looking at a level to the downside and a level to the upside to be looking for. So I'm going to keep this video short and sweet, so I'll go ahead and get right into it. Right here at this tweet, I noticed we were front running an important level I had marked out, and it was this one. This daily close open with this golden pocket and then also a 786 pulled from another spot. If you want to know how I got that level, you can go back and look at the previous videos. But right here, I noticed we had front run that level with 1, 2, 3 swings to the high side, but we never actually took the level. So I said, if we continue front running and consolidating below the resistance for an extended period of time, I will be watching very closely for a short squeeze through the level. And what did we do? We consolidated under that level for an extended period of time, right here. I'll go ahead and remove this tweet. I noticed that we started putting in contracting price action, and I knew the probability was that we would squeeze straight through that level. So right here you can see, and this was before this candle started moving upward. I'll actually go to the 1 hour chart. It was the hour before. I'll remove this rectangle. I said, might want to check out that free liquidity trading module I released before getting wrecked this week, because I knew price was ready to move upward and take the liquidity above. And I knew a lot of people were going to get wrecked because of that. I'll go ahead and remove this tweet. So what happened? We squeezed straight through the level. I knew from watching the order flow that shorts were getting pushed out of the market. They were being forced to buy back in while open interest was decreasing. We put in this swing to the high side right here. And I wanted to watch for more information because I wasn't convinced that this was the end of the squeeze. And what I saw was that as we moved up in this area, it wasn't actually longs that were moving the price up. Or rather, what was happening here was that new shorts were coming in, and you would think if new shorts were coming in, price would be going down. But in a situation like this, it reveals to me that there are larger traders sitting in this area absorbing all of those new short trades, pushing price upward. I said this move is only a short squeeze so far, and these shorts keep fueling it. What happened? Price moved up again, and everyone who was shorting this anywhere in this area was likely putting their stop loss above this high. Because I was seeing all of these shorts getting absorbed, I knew there was a high probability that this high would be taken. And that's exactly what happened. Right here, you can see my Twitter post. Now I'll zoom out a bit and show you what was the trigger for my entry. It was when price fell back below this previous high here. It created a perfect swing failure pattern of this previous high. Now at the same time, other Twitter gurus were calling for a brand new bull market, as they always do on any kind of short squeeze. So be careful who you listen to. Do your own research and follow people who do really professional technical analysis and not just scream at every pump and every dump. I'll go ahead and get rid of this tweet and also this previous level here. What I want to do is go ahead and look at the level we are currently at, which is a minor support level. Right here, you can see that if you pull a Fibonacci retracement from this low to this most recent high here, we are currently in the golden pocket. Additionally, you can take a trend-based fib extension from this high to this low to this high, and you can see we're at the 2 to 2 extension. Now, pulling a trend-based fib extension like this can take a bit of experience and intuition, and sometimes can be a bit subjective, so do be aware of that. Additionally, also because of experience and intuition, I know that this high put in here is likely to provide some kind of support on the way back down. So currently, I'll zoom in, we are in that area or zone of support. Now, I don't have high confidence in this area or zone of support, but it is something I want to keep an eye on because it could provide a decent long setup. Not a swing long, but maybe a day trade, but more likely a scalp trade if it provides any long at all. So I'll go ahead and I will remove this level so we can move on to see levels to the downside and levels to the upside. First, I'm going to start with the downside because ideally this is the setup I have in mind. After we put in this most recent high, and I'll go back to the 4-hour chart, I pulled a fib retracement, the golden pocket, from the low to this new most recent high. Additionally, I had a volume range profile pulled from here. Now, there are a few ways to do this. You can pull the volume range profile from the first demonstration of buying interest on this impulse downward, like I have, or you can go down to the very bottom. For this level, it doesn't really matter because either you have the point of control or a high volume node here. Either way, I know that there is an area of historically high volume in this area, and it's exactly in confluence with the golden pocket. Now notice as well that we have made a swing above this value area high, and we've got what looks like acceptance back into the value area. This tells me that price is likely to at least come back down to the point of control. Now, we can certainly find some support at the point of control and continue moving upward. But ideally, I would like to go ahead and move all the way back down under these lows here and take that liquidity. I know there's liquidity here because there's a series of higher lows right here. Not only that, you have a high volume node right below. In a situation like this, very large traders like to target levels just like this because they can participate in the market with a significantly reduced cost. They won't experience the slippage they would experience anywhere else. So I'll go ahead and put that high volume node right on top of the golden pocket. Additionally, this is a bit of context. I'll take that daily naked VWAP off. The important part about this, in addition to the high volume node and the liquidity, is that there's a monthly naked point of control here. This is the level at which the most volume occurred last month, and price typically likes to revisit these areas, and there is very often a reaction off of these levels. Now, because this monthly naked point of control is also at a high volume node in the range, which makes sense because this range has occurred over the past month, but it's also in the area of the golden pocket, and we know there's liquidity below. If you don't understand why there's liquidity below, go to the last video I posted on liquidity trading, and that will explain all of it. Let's see what this is. The same fixed range I just toggled on. So this is the level to the downside. What I would like to see is some kind of move downward and a reaction off of this level. Now I have to wait for more data to determine whether this is going to take us back into this area of consolidation right here to find resistance, or if we're just going to keep moving upward. Ultimately, it doesn't matter because I have levels to trade below and above. Now to the upside, if we continue squeezing upwards, which it is possible we could continue squeezing upwards from here, I would be more bullish if we actually took this liquidity first and then started going upwards. Either way, if we start moving upwards, the area I'm looking at is 19K. Now I'm going to toggle on this 19K level, but there's going to be a lot of stuff here and I'm going to declutter it. Primarily, I'm looking at this zone here. One reason is because it's the golden pocket from this high down to this low. There's also imbalances here. You can see with order flow software and footprint charts that there are market imbalances here. They're stacked selling imbalances, which simply means selling was significantly more aggressive than buying in this entire area. Price generally likes to come back and test these areas. There's also a daily naked VWAP here. So we have pretty good confluence in this spot. But additionally, you can see that this right here previously was a very important area of consolidation. So that just adds to the confluence. So what I'm looking for here is either some type of move downwards to take this level, and then potentially a move all the way back up to the 19K area, or I'm looking for the squeeze to continue, take this 19K area, and then move downward. Now in that case, this level might actually change because the golden pocket is going to change with a new high. So as more data comes in, I will continue doing more technical analysis. But for now, these are the two levels I'm looking at. And a lot of people come into my DMs asking, well, which level do you think we're going to hit first? And typically that's because these traders have already entered the market, and typically it's at a very bad area. They may have entered right in the middle of this range here. And they see price going up. Maybe they entered a short here, they see price going up, and they want some type of confirmation that we're going to come down and hit this level. Or they longed up here, this area, and they want some sort of confirmation of whether we're going to hit this level first. And that's a tough spot to be in when you've already entered a bad trade. But as a professional trader, it doesn't matter which level is hit first because I'm going to trade both levels. Now, of course, that's pending price action as it approaches that level. I'm not just going to take a blind trade off of it. But it doesn't matter which way price goes first. I can still take successful trades either way. Now, before ending this video, I do want to point something out. There is quite a long series of higher lows here. I'll delete this. And actually, I should remove these levels here. Not that arrow. All right, right here. There is a long series of higher lows right here. What I went through in my liquidity trading series, in my market mechanics masterclass, is what happens a lot is the traders that step in and form these lows put their stop losses and invalidations right below these lows. So it might look something like this for those large traders. Maybe even right here. What this does is it creates a cascade of liquidations and stop losses to the low side. So if you're a very, very large trader and you want to enter a long position, what you have to do is find a lot of people willing to sell so you can buy from them. The way you do that is you force longs out of the market, you force them to sell, you liquidate their accounts, and all the while you are absorbing everything that they're being forced to sell. So if you're a very large trader, your goal right now, if you want to get into a long, is to cascade these stop losses. Now that's either because you have already entered your short and want to get out lower, or because, like I just said, you want to fill your longs, or both. So do beware as you're trading this uptrend that there is a lot of liquidity to the downside to be had. I say that because I want you to keep your risk management on point. I always say that it's not about the strategy, it's about the risk management. That's what makes successful traders. That's all I have for this video. Thank you so much for watching.